Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. So in this episode, I'm just going to do a really quick mid-year update. Today is July 2nd, 2021. We are week number 26 of the year, and I'm going to do a mid-year update. So let's talk about what went well this year. So far, what I did was I created a slide this year showing my 401k plan. Now, this 401k plan is just my most recent employer. I know some of you wonder about that, and that's okay. I'm not here to, this is not a humble brag or a way of just doing anything else. What I've been doing is I've been publicly displaying how my 401k plan goes up and down, and how much money I put in each paycheck. And as you can see, for the most part, it's reasonable. I'm only putting in anywhere from $4,000 to $5,000 or $6,000 a year, and it ranges depending on how much money I make. But that's number reasonable. I'm not making videos where I'm showing people how I'm saving 15 or 20 or 30 grand a year. I know I talk to people, some people who invest 40 or 50 or 60 grand a year in new contributions. So this is not something I'm doing. I'm doing something that's very common that most average folks are doing themselves. Again, I'm only investing I'm investing anywhere between $4,000 to $6,000 a year, and that's my average for the last 5 years. So first thing I want to cover is, on my first paycheck of the year, I think I was showing $54,000, and you can see that right there on January 15th. Come the last day of this half, on June 30th, my account balance just broke $67,000. And again, that's this year. I added $3,700. I think my match was $1,800 so far this year. And so you can do the math. $13,000, only $3,000 or less than $4,000 came from my out-of-pocket contribution, which means most of the other gains came from the gains of the stock market. The next thing, if you look at the next column, I have this thing called the 2001 challenge. Basically, I create videos every week showing how much money I made in my options trading and how much money each trade has paid me in dividends. So those are being tracked every year. And again, since I was making this video on a Friday, I don't have my week number 26 data, so you're going to have to wait for that. But so far this year, my running P&L is 17 grand came from options trading, and $3,000 came from dividends collected in those portfolios that you see on E-Trade. The last thing is, if you notice, if you multiply the $20,000 by 2, that means I'm projected to make about $40,000 this year on my 2021 challenge. Roughly $6,000 will come from dividends, and if you do the math, that would be about $34,000 in trading. The other thing people ask me is, well, how much money am I using to trade? Do I have a $20 million account or do I have a $100,000 account? And the answer is no, I don't have either one. But the key is my buying power is actually less than $100,000 that I use. I have less than $100,000 in cash. And so most options that I'm doing, and you guys see it a lot, is I'm doing a lot of, I do some cash secure puts. I am doing some cover calls, but most of my money is coming that I'm making right now is from credit spreads and iron condors and stuff like that. So I'm using cash. Basically, you can look at the buying power, and that's where the trading is coming from. Do I expect to maintain that pace? It's hard to say. Markets are tricky. Sometimes they're easy to make money, and sometimes they're not. So I'm not gonna say with absolute certainty I'll finish the year at 40 grand. I'll be happy at 30 grand, let's say. So, but who knows? We'll see what happens with the market. Right now, they're moving against me. We had S&P 7 days in a row of up. And as a trader who is neutral, I'm not a directional trader, things like this is actually bad for me. So while you're making money because everything's hitting new all-time highs, for my options trading, it's actually really bad for me. So we'll see what happens. I'm the type of person now who's saying, well, I need some down days to make up for all those up days. Bitcoin, while it's down, Bitcoin is hovering $32,000. Sometimes it goes to 36, 37, then it's down. But overall, it's up 21%. No one's complaining there. I know some people were excited when Ether did his large run up, and most people made 8 or 9 or 10-fold their money. So I'm still dollar cost averaging. I'm not doing a lot. I'm doing $50. Don't forget, Bitcoin is very risky for many reasons. The asset class is dangerous. 2 is there's a higher risk of fraud, and I suggest that if you do Bitcoin, you either store it somewhere safe, store it offline, get yourself a hardware wallet, or just hold so little that if you lose $100, it's not going to bother you. Like I said, I have very little in it. I don't even have a lot. I mean, I do have an offline wallet for it, but it's small. Again, this is really small. I'm not trading it. I'm only following it because I know it interests me and is really popular. The last thing I did was my credit score was, I didn't really care about credit score, but this year I decided to, let's try something new. Instead of, I'm from a Dave Ramsey background, which teach you if you're out of debt, you don't really care about your credit score. You can buy everything in cash, and I tried that method. It's not that it's wrong. I enjoy being out of debt for many years, but I decided now to say, let's try a different approach. Let me worry about a credit score. So the first thing I did was, in the last 3 months, I moved it up. So I did apply for new credit cards. I had to worry about how to manipulate the scoring, right? It's based on credit utilization, the percentage, how many cards you have. So I applied for some new cards. I wanted the bonus, things like that. So that's working well for me. What I want to do is show videos of how much money I can make from normal spending that you pay off in cash. Do you ever get rich from these points? No. So again, that's the most popular thing that people argue about. No one gets rich doing it. But can you make a lot of money from paying your bills on time? And the answer is yes. If you're spending $1,000 a month and you're paying it off in time using cash or debit, the only difference is the average person can now make 2% a month doing nothing different except for using a cashback credit card. Amazon credit cards give you 5% back. Some people get 5% back on their gas or 4% back on their gas. So there are many other ways to up your percentage. So I'm going to try that, try to track it. Again, I'm not teaching you become rich from this. Sometimes you're rich despite of this. You're just trying to maximize everything else. And I'm going to show you how I'm doing it. This year so far, I made less than, I did get some referral bonuses, and some of them were small. I didn't make a lot, but I'm going to focus on that, and I would like to double or triple my referral bonuses that I receive. So if you guys want to learn what I'm doing, before you open up your own account, ask me, do I have a referral link? I'll be glad to send it to you. That's a small gesture of you saying, hey, thank you, Howie, for showing me what you do. Don't forget, I don't get paid for any of this stuff. Best way you show that you're grateful, and you're like, hey, give me a referral link, because sometimes I'll make $2 or $5 or $10 from it. You don't make a lot from a referral. It's not a full-time business. It doesn't sustain me. The next thing I put on here is my debt to asset ratio. So I am accumulating some debt. So like I said, I'm moving away from this Dave Ramsey always debt free type thing. So I listed the 2 ratio that most people care about. Some people care about the debt to income ratio. I'm not a big fan of that. My income can be close to 0. So if you have close to 0 income and you have debt, of course it's going to look bad, right? If it shows a 400% debt ratio, some people are like, oh, that's horrible. But if you lower your income close to nothing, then it's misleading. A better ratio is the debt to asset ratio. Whether I'm working or not, what you care about is how much debt am I taking on compared to my assets. And then really, if your assets generate an income, then really what you care about is your debt greater than the income produced by your asset? And for me, the answer is no. I can let my passive income, like dividends and other stuff, it makes more than my debt interest to service. So this is something that you guys need to know. I'll talk about it more in the future. Other things that I've been doing is you can live large without spending money, and I just did that recently. I use hotel points, stayed at a JW. The average room rate is over $250. Again, these are really nice stuff, nice luxuries. I mean, it's not cheap. The parking will cost you 46 bucks. You know, you can always walk there, I guess, but that's not for me. I'm okay with paying 46 bucks for a parking spot on a valet. So the other thing I did in the last 6 months was I expanded my networks. I am working with new coaches that are part of my team, and we share a lot of knowledge that benefit all of our clients. So if they're my client or their client, we are cross sharing our Zoom meetings so that all of our clients matter. Remember, this is not a competition. It's not a coach versus coach, or this is not McDonald's versus Burger King type competition. Financial coaches understand that we're serving our customers. And so one of the things that we like to do is, if you become my client, you have access to some of the other coaches' stuff. And this is the benefit of joining a team of coaches that work with other coaches. One new thing is I'm still growing my YouTube channel, social media presence, created a new retired spouse hashtag, and that's what I'm doing. So that's my year-end summary. So with that, hope everything is well. Let me know how you're doing in your first 6 months. Comment below, like, subscribe, and hopefully let's have a profitable second half of 2021.